Welcome to Standard Chartered TV. My name is Edwin, and with us today is Sundeep Bhandhari, the Regional Head of Global Markets Northeast Asia for Standard Chartered Bank, sharing with us his thoughts on the bank and how it's changed over the years.
Thank you, Edmund.
A warm welcome, Sundeep. So you joined the bank in 2000. How much has it changed since then?
Prior to me joining Standard Chartered Bank, I did a little bit of research on the bank because, I wanted to make sure I was making the right move. And Standard Chartered Bank has a very checkered history, perhaps prior to 2000 and further back, the 1980s, when it effectively was supported by Singaporean tycoon, the failed attempt by Lloyds Bank to take over Standard Chartered Bank. Then in the 1990s, again, the bank suffered from an India scam, the Asian crisis. So, one can look back at the bank and say, it's a little bit slippery bank. And, a phrase, the banana skin bank, is how I perhaps could have described the bank strategically. But what has changed? In 2002, Mervyn Davis became the chief executive. He appointed a finance director, Peter Sands. And from a wholesale bank point of view, where I currently sit in, what happened? I remember in Chennai, Mervyn Davis, when he appointed Mike Rees, chief executive of the wholesale bank, saying, this bank has to change. The wholesale bank wasn't making much money. Its return equity was very low. We were heavily asset driven, and we had no real clear strategy. So, three things happened. The first was strategy. Africa, Asia, and Middle East. This became the mantra. Focus, as opposed to a bank which would do business anywhere in the world, we were focusing on where our core competence was, where we had strong franchises, strong market presence. The second was client-driven. This was a bank that was going to focus on delivering quality service and products to clients. So it was a client approach in these markets. And the third was to build out product capability to what the clients wanted. Not what product felt that they wanted, but what client. Now, this was quite a painful process because you don't do these kind of changes overnight. And if you go back and a little further, it's quite interesting because we were effectively probably 2 or 3 banks within the wholesale bank. There was a corporate bank, an institutional bank, and a treasury. So, part of the behavioural change was bringing those 3 parts of the bank together to form the wholesale bank. And, we sit today and we look back 5 years and we think ourselves how the bank has grown. And I suppose the biggest challenge for the bank has been the growth rate. We have grown so successfully, far in excess of our own expectations, is that the bank globally is catching up from an infrastructure perspective. And that sheer growth, I think last 12 months and going forward, 10, 12 new dealing rooms have been built. The infrastructure we're investing for the future of the bank is tremendous. So to summarise, the bank, what I've seen, big change for wholesale is a clear strategy, client-driven. And what I didn't mention, a big success factor was I said Africa, Asia, Middle East. Well, what that means is leveraging the network. And perhaps an example might help to a layman. We bank a client in one country. We bank a client in another country. Okay? Client A is exporting to client B. We can help on both sides. So in our local markets, where's our competitive advantage against local banks? The network. A local bank hasn't got offices in 70 countries. We have. Now, an international bank, well, our competitors internationally, how many of them are truly in these emerging markets?
And then what about on the treasury front? What are your aspirations there?
On financial markets, that's been a tremendous growth story the last 4 or 5 years. And that's part of what we call the triangle. And when I refer to this triangle, we have a hierarchy of needs for clients. The basic product is lending, taking deposits. Okay? The next core of our franchise is transaction banking, and that's a fantastic, well-run business. That's the glue for the client. Custody, cash, operating accounts, and then trade finance. This is the basic glue of basic banking. The next part, financial markets, is coming up. Is what we call the value addition, which is capital markets, sales and trading. And then the last part of the triangle is what we call the strategic part, which is the M&A equities piece. We're looking to take clients up that. Now, in that triangle, a bit I look after, particularly financial markets. The product innovation, if you go back since 2000, was back then we were basically a foreign exchange bank. Nothing wrong with that. Good trade finance, capture the foreign exchange. But today we offer a client a full solution from risk management. Here I talk about the ability to help them hedge interest rate risk, hedge commodity risk, local currency. You know, local currency markets, we started that business 7 years ago. And across Asia, we are dominant. In India, we're number one. Hong Kong, we're number 2 player. You know, this is a business which is 6-7 years old. So, you know, the financial market space is the value addition that we're giving the clients to manage their overall balance sheet, their strategy.
And probably the last question, what do you think is the outlook for Standard Chartered? What is the picture ahead?
I think notwithstanding the uncertainty in the short term, in the medium term, you know, the bank is really well positioned in Africa, Asia and Middle East. You know, we're in the right markets at the right time, and we have absolutely the right people to take us to the next level. And if I add to that, you know, India, China are seen as 2 big markets. We are very strong in those markets. So we are really well positioned to capture the growth that we see going forward in the future.
Thank you very much.
Thank you.